Hello and welcome to the Global View on this Friday. I'm Andrew Gagan. Good to have you with us again here at AusBiz. Let's get across those market moves overnight. Global equities mostly lower while gold fell on profit-taking. Bitcoin plunged and oil prices jumped on rising US-Iran tensions. Now on Wall Street, main indices there falling to a one-week low, aside from the Dow, which managed to eke out a modest gain. It's off the back of another wave of AI-related spending announcements by mega-cap tech companies, which has unnerved investors. Well, leading the losses, Microsoft. Its shares slumping after the software giant's cloud revenue prompted fears that its spending on its OpenAI alliance is not translating into monetisation fast enough. Apple reported after the bell, beating Wall Street estimates for quarterly revenue powered by strong demand for its iPhones and a sharp rebound in China. iPhone revenue growing 23% year over year to $85.2 billion. Total quarterly revenue up close to $144 billion. That's up 16% from a year earlier. It's also announced it's acquired QAI, an Israeli startup working on AI technology for audio. Well, Meta Platforms made impressive gains after its quarterly results, with investors seeing its AI spending translating into strong growth. Tesla shares slipped into reverse after the EV maker outlined plans to more than double capital expenditure to a record level, while Elon Musk's SpaceX and XAI are reportedly in discussions to merge ahead of an IPO planned for later this year. Among the other losers were Salesforce, Adobe and cloud security firm Datadog. IBM shares jumped after beating estimates for its fourth quarter earnings, while Caterpillar and MasterCard gained after posting a higher profit for the quarter. A defence contractor Lockheed Martin rose after forecasting 2026 earnings above Wall Street expectations. And Southwest Airlines shares taking off after the airline forecast a stronger than expected annual profit. And in Europe, German software company SAP's 2026 cloud revenue forecast failed to meet expectations, with its shares tumbling some 15%. And sportswear maker Adidas launching a share buyback of up to €1 billion on the back of record 2025 sales. Well, British Prime Minister Keir Starmer and Chinese President Xi Jinping have pledged greater cooperation on trade, investment and technology after meeting in Beijing. The UK Prime Minister is the latest global leader to head to China, where he called for a more sophisticated relationship with improved market access, lower tariffs and investment deals. Meanwhile, the US trade deficit widened by the most in nearly 34 years in November as capital good imports surged, thought to be driven by an AI investment boom, which could prompt economists to trim their economic growth estimates for the fourth quarter. And the trade gap increased around 95% to $56.8 billion. And the number of Americans filing jobless claims fell last week, suggesting layoffs remain low, but tepid hiring is stoking concern about job security. Well, the US 2-year Treasury yield has eased to 3.54%, the 10-year down to 4.22%. Markets are pricing in a 15% chance the Fed funds rate will be cut by 25 basis points at the next meeting in March, with a total of around 2 cuts in this easing cycle. And the US dollar remains close to 4-year lows against most major currencies as uncertainty over US economic policies and geopolitical moves. And the Aussie dollar has drawn additional support, particularly on the prospect of an interest rate hike as soon as next week. It's near a 3-year peak, trading at 70.5 US cents. Well, oil prices have surged to a 5-month high on rising concerns that global supplies could be disrupted if the US attacks Iran, which is one of OPEC's largest crude producers. Brent futures up around 3.5%, close to $71 a barrel. Gold has fallen as investors took profits after a record high, having touched almost $5,600 an ounce. Spot gold currently at around $5,320. And copper has jumped 5% amid reported increased Chinese demand, while iron ore is up more than 1.5% to $106 a ton as China scraps its property sector borrowing limits. And Bitcoin has tumbled to around $84,000. Well, let's now head back to Wall Street, get across those latest earnings results. Joining us, Dan Ives from Wedbush Securities. Dan, terrific to have you back on the show. Thanks for joining us. So, lots to talk about given those latest earnings results this week. Let's begin with the one that's just dropped in Apple. That revenue, I see Tim Cook describing that as staggering. Would you agree?
Yeah, I mean, like, look, you think about this iPhone beat. It's really something that we have not seen. You'd have to go back a few years. I think a lot of it's China. China's gone to a big tailwind. That was a headwind for them. This is significant. It's all setting up. It's not just about iPhone. Of course, it's about AI and now Google partnership. That's really going to be the most important for investors going forward.
Yeah, you've called this a pivotal year for Apple. Dan, what are you seeing there, particularly in terms of AI initiatives? Perhaps it's been slow relative to the rest of the pack in terms of those developments, but what are you looking forward to for Apple?
Look, they've been on a treadmill at 2.5 speed, maybe, right? I mean, that's been the issue. They've been nowhere when it comes to AI. But Google partnership's key with Gemini. They're bringing new blood from the outside. Microsoft and some other, individuals that are coming. And I think, look, this is going to be very important for Tim Cook's legacy in terms of to make sure when you have a two install base, 2.4 billion iOS devices, 1.5 billion iPhones, you can't watch the AI revolution, a fourth industrial revolution, from the stands.
And Dan, what do you make of that acquisition, QAI, that Israeli startup? So that's a focus on audio technology.
Yeah, good. Look, I mean, I like that deal. I mean, I could argue maybe I wish they made bigger deals like a Perplexity and others, but they'll continue to do these acquisitions because the reality, they're going to need to be aggressive on acquisitions for a company that historically has not done acquisitions, given what we see in this AI arms race.
Dan, let's turn to Microsoft. What a different story it has been. It's been punished severely. Is that fair, do you think, in the eyes of investors? Because obviously there's concern over that spending, particularly on that OpenAI alliance.
Look, I mean, me and you've talked. I mean, look at Meta last quarter. Meta, they spent way too much. Stock got hit. Now look at them last night. So I think it just shows like investors are going to punish these companies, but the growth on Azure is extremely strong. They're in a I think we're at pole position when it comes to enterprise, and I think there's going to be over scrutiny. I think this is way oversold at these positions relative to that quarter and what I view as what their growth outlook's going to be this year.
All right, so oversold. You're what therefore seeing a buying opportunity.
575's price target. I think we're going to look back a quarter ago at Meta. Look at it now. Go back a year ago to Google. Now look at it. I'm just saying, like, that creates the opportunities, in my opinion.
But do you feel as though that investor concern about that amount of capex spending, which is eye-watering, is justified because they have not seen that result yet in terms of that monetization?
Yeah, look, I get the nervousness I hear from investors, but it's a balancing act because you need to build up the data. There's more data centers under construction than active data centers. That is what they're dealing with, and it's hard for them to just make everyone happy. And I think that's going to be the transition that we see this year. But I think this will be the year of monetization.
All right. Well, you've made that comparison with Meta. Dan, let's go there then, off the back of its result. What did you make of it?
I mean, robust digital advertising. Look, you're not gonna win a judo match against Zuckerberg, right? I mean, it just comes down to the install base is massive, and the monetization of AI is going to be huge in the digital advertising side. And that's what we're seeing. I mean, $900 our price target. It was a huge quarter for Meta, and I think it's a preview little. I think what we're going to see from Google as well next week.
Dan, are we at that point perhaps where we're starting to see distinct winners and losers in that AI race?
I think, look, software is a loser right now. I think maybe some of that's unwarranted on some of the names, but that's definitely being viewed as a loser in terms of the street, and they got to prove it. Otherwise, look, you can't just buy Mag 7. You got to buy the second, third, fourth derivatives. Who are the winners? It's going to be a stock picker's market when it comes to tech and AI, and I think that's playing out early on in terms of this year.
And well, let's move on to Tesla. Of course, this is about hardware, but it looks as though perhaps Elon Musk is very much now focused on the production of robotics in the form of Optimus, perhaps less so on producing cars. Is that the right way to go?
I mean, look, this is the autonomous and robotics time. I think it's the most important year ever for Tesla and Musk. And I think that's going to be the focus. Look, it's AI coming to the Tesla story. I mean, 600s are base case, bull case, $800. I get the deliveries, and that's showing maybe some stabilization. But what's going to drive this stock higher? It's about autonomous and robotics. And I think that's fun, especially when it comes to robotaxi launches.
Now, just in terms of that automated driving too, it's made a change there just in terms of that software subscription. Is that a plus as far as you're concerned?
Yeah, it's but because penetration today about 15% for FSD. You start to get that up to 50%, which I think that could get in the next few years. I mean, that would all drop to the bottom line, be massively accretive. That's what they're focused on.
And Dan, the company also investing $2 million to acquire shares of XAI. Is that just going to annoy investors a little more, do you think, or not?
I mean, I love it. I mean, we've been huge proponents of XAI. I actually wanted them to buy SpaceX as well. Who knows what happens with SpaceX and XAI? But look, it becomes more and more of an AI story. And that's what investors want to see. And that's a smart move. And I love them going down this path.
But what is that expectation then? Perhaps that SpaceX and XAI are planning an IPO perhaps later in the year?
Well, yeah, and then I think eventually it's possible Tesla will also own a piece of SpaceX. And it speaks to just more and more that's becoming almost, really an ecosystem that Musk is building from Tesla to SpaceX to XAI. But it all speaks to this AI revolution, everything that Musk is building under really that hood that's now starting to become more connected tissue.
So Dan, all up, are we right to still be talking about the possibility of an AI bubble on Wall Street?
Look, it's like I started CES, saw it in Davos, see it, around the world. I don't think that you could say there's a bubble, but like with any validity. Now, are there pieces of the market that maybe could get inflated? Of course. But it speaks to our view. Like we are still in the third of the way through this cycle. And that's why I think it's going to be a tech bull market this year. But as you're seeing with earnings, you got to prove it. Any shortfall, like we saw in Microsoft, and anything Street doesn't like, stocks are going to get punished.
Dan, always terrific to get your analysis. Thanks for joining us on Wedbush Securities. All right, let's turn to the local market ahead of the open here. We are expecting a positive session. SPY futures up there a healthy 1/3% or so. We'll get across all the latest data. We're going to get producer prices later this for the December quarter, later this hour too, and some production updates as well. Join us in just a couple of minutes for the open.